Hello everyone. So today we're going to be talking about the budget changes. The tax reduction, especially the national insurance reduction and the payee tax reduction that the Liz Truss government has posed in UK, and what is going to be the take-home impact for you. So I'm also going to give you a free Excel calculator that I've built, very similar to what I had done during my IR35 calculations, where I had given an Excel calculator. So I'll explain the monthly increases, how the calculation is being done, and there are two major changes. One is the national insurance changes, which are going to go effective from November 2022 next month, and then the payee tax cuts, which are going to go live from the April 2023, which is the next financial year. The financial year runs from April to April. So we look at these calculations, see how much extra money you will get, and you can also use the calculator to find out, put your own income and find out how much extra money that you will get based upon your circumstances. And also there's been a lot of criticism on the government that could have been done differently, and it hasn't helped the economy so much. So we will also look at why it hasn't helped the economy and what could have been done differently. A few options that I had thought of while I was preparing the calculator, while I was working the comparisons and the numbers, a few options that I had thought of, just wanted to share those options. So again, in today's video, I'm going to be using this Excel sheet, which I will share in my description, the link to this Excel sheet. This is a Google sheet, and in a Google sheet, you can actually make a copy and you can create your own version. The reason I say this is because I posted a video about IR35 using a lot of examples and a lot of calculations, and I had given the link to that Excel file that I had used in that video, and there were a lot of good comments about it. But then for that particular Excel, I posted an English version and a Tamil version about it, explaining how contracting works and with examples of how you can optimize your salaries. And in that video, there were a lot of share requests for that Excel sheet, but in reality, that Excel was shared with everyone. All you needed to do was click on the link and it will go to a view only, and you click on file, make a copy to make your own version of it. Then you can edit it. The version that I had shared was shared for everyone. So when people were requesting, they were requesting editor access to it, which if I allow, then it's going to actually edit it for the rest of the people as well. That's why I respond to most of the people, but then every week I keep getting emails after emails about it, and I try to respond to as many people as possible, but still, it's easier if you just do a make a copy. And again, thank you for all the feedback and all the comments that you had posted on both the English version and the Tamil version about how easy it was to understand. So let's start with the calculation of how the income tax structure works. This is a similar sheet that I had used in my IR35 calculation. I'll go through the basics again. So in UK, there are two types of deductions. One is the payee tax, another is the national insurance. And payee tax is made up of four main brackets, and the tax slabs up to £12,570 is 0%. So there's no tax on that. And then from 12,571 to £50,270, there's 20% tax. From that point till over 150,000, it's about 40% tax, and after 150,000, it's 45% tax. And there is another rule that the Labour government had brought in the last time they were in power, which was above 100,000, you lose that initial 0% benefit that you get, and it's taken back pro rata, which means that you will be paying an additional 20% on top of the 40% tax for the salary that you earn between 100,000 and 125,000. That is recovered back. The benefit that was given is recovered back. So eventually you'll be paying nearly 60% tax when you go above the bracket of 100,000. Now, national insurance works like £1,048 to 4,189, the first bracket. Till 1,048, there's no national insurance. After that, it's 13.25, and after £4,189, it's 3.25%. So this is how it works. And if you put your annual salary here of 50,000 or whatever your annual salary, this calculator will then break it up into these brackets, and it will tell you exactly how much deductions are made from your salary and what will be your net take-home salary. So for a £50,000 salary, you will have £624 payee tax, 430 national insurance, and your net take-home will be about £3,130. So it's a very simple calculation. There aren't that many claims or deductions that you can make like in India. So it's a very simple process. As long as you know the slabs and the national insurance structure, that is how it works. Now the major change that they are doing is that the national insurance is reducing by 1.25%. But in reality, the national insurance only went up recently from 12% and 2%. So this is not really a reduction. This is a reversal of the national insurance increase that happened a few months back. So if it goes from 13.25 and 3.25% to 12% and 2%, that will effectively give you a 1.25% reduction in national insurance, which then translates to, if we take an equal comparison for the 50,000 salary, it's about 40 or 50 pounds savings that you get on the national insurance part, or a few. We'll have a comparison on a month-on-month basis for every gross salary, but that's how the calculation works. Everything else remains the same. From the April 2023, when the next financial year kicks in, the tax rate, the 20% tax rate, then gets reduced to 19%. That's the major change for the second tax slab. So the tax slab between 12,571 to 50,270, the tax reduces from 20% to 19%. That gives you an additional benefit. That gives you a 1% payee tax lesser on the first tax slab that you would be paying. And there is another change that was introduced and got cancelled because of public opinion and outrage, which is that people who are earning above 150,000 are currently paying 45%, and it was proposed that was going to be reduced to 40%, and it got taken out. So if you do a month-on-month comparison, again, this is a sheet that you can use. If you put your whatever is your gross annual income, if you put it into that first column, then you will see how much monthly increase you will have and how much yearly increase you will have from November 2022 and from April 2023. You will see both the comparisons. So for a 60,000 salary, you will see the monthly increase is about 49 pounds and about roughly 81 pounds in the from the next year onwards. And this is a gross annual comparison. So if you're earning 20,000 or 40,000, 50,000, what's your monthly increase from November 2022, and what's your monthly increase from 2023 onwards, and also a yearly total comparison. So as you can see, it's not that high. I mean, even a person who's earning about 50,000 is probably going to get about 40 pounds higher or 70 pounds higher, and it's not comparable to the inflation that's happening in the UK right now. So this is what the main problem has been, that even though the budget has been proposed, even though the tax cuts have been announced, if you look at those numbers, they are not meaningful enough. And this is one of the main problem with the budget, that on one side, there's a huge deficit to pay for these tax cuts. There's no balance. There is nowhere else that they're getting the money from, which means that there are this billions of pounds of borrowing that's going to happen to pay for these tax cuts. And it doesn't give enough money, it doesn't do justice. Even after going through all these pains, giving 50 pounds extra per month, it's not comparable to the inflation that's happening in this country. So, and there's not enough money means that if people are not able to spend more, we're not boosting the economy. Only if you are able to introduce money into the economy, people are able to spend into the economy, that's how you will boost the economy. So these headline number of tax cuts is having no balance and no offset. It's causing a concern. And take the inflation, for example. Even the milk prices have gone from the last 10 years, milk prices have been like £1 for 2 gallons, and it's gone up to about £1.50, £1.80, for example, which means that just the milk cost alone for a family of 4 is probably gone up by £5-6 a week, which is 20 to 30 pounds a month, which means that the 50 pounds is not even enough, not even a drop in the bucket to offset some of these inflation costs. And if you look at gas prices and electricity prices, people are paying nearly about 150 pounds more on a monthly basis just on their bills alone, which means that this is just a drop in the ocean and it's not doing enough to compare against the inflation or the rate of inflation or the increase in prices with regards to the commodity. So what are the options? What else can you do? So I'm not an expert, it's just a few thoughts that I was exploring while I was preparing these Excel sheets and comparing against the contracting and everything. There are just a few options that I was just thinking of that probably could be tapped, right? So the current proposal versus the alternative proposal. So there is no increase in tax slabs, and that is one of the main things that I think would probably make sense. And I'll explain why, and with a few calculations. So changing the tax slab first by the 13,000, the 12,500 for the 0% rate, and also mainly the basic rate. If you increase it from 50,000 to 60,000, and then reduce the tax to 19% only for the gross income earners who are below the basic rate tax band, which is below 60,000. Anybody earning above 60,000, they will automatically get the benefit of 50,000 to 60,000 being, an increased tax band. And so you can basically tax them at 20%. You don't need to tax them at 19%. So there's a little bit of equality that we can create. But mainly we have to motivate the employers to push the salary above 50,000 with some sort of an employer national insurance rebate. So we've spoken about insurance rebates for the employee, but there is no incentive for the employer to give more money to the employees. So it's not enough that the government is doing by introducing tax cuts. They also need to motivate and incentivize the employers to pay more to the employees in this time of need. So let me explain with a few examples, especially with the increased tax band, how it can introduce more money into the market, right? Because that's one of the main things. Apart from more money, the more money needs to be introduced into the market without actually printing it. So let's look at the contractors or the outside R35 contractors or self-employed people and how the tax structure currently works. So this is a typical tax calculation that I had shown in my R35 sheet, how the tax calculation is structured and how it is optimally structured, right? So if you look at most of the articles that are written for contractors, they take into account about 12,500 pounds, which is the payee salary. That's how much they will take as an optimal payee salary, and the rest of it is actually coming through dividends, and the combined amount is about 12,500 in payee salary and 37,000 pounds in dividend. Now if you do that, the money remaining in the company on top of expenses, this is an average calculation, and again there's a lot of assumptions to be taken into account. If you do this, the money remaining in the company account is about 34,738. Now why would a contractor do this? Why would they do this? Is because first thing is like I said, in a limited company, the money comes into the limited company. So if you are either you're on a contract or you're doing something which is earning money into a limited company. For example, even my YouTube goes into the limited company account. Whatever small amount, even if I earn like 80 or 100 pounds, it still goes into that limited company account. And that limited company account, then I take money out into my personal bank account using three options. One is the payee salary, dividends and expenses. And payee salary and dividends, usually the structure is about 12,500 and 37,500. Why is that? Why is this an optimal structure? So let me show you an example, right? So this is a payee salary of 12,570 means that you pay no national insurance and you'll pay no payee tax on this kind of a structure. And dividends are calculated based on the gross annual income, which is including your dividends and your payee salary. So which means if you combine your payee salary and dividends, and if it is below 50,000, then you're coming into the basic rate structure. If it's above 50,000, you're going into the higher rate, and above 150, you go into additional rate. What is the advantage of the basic rate for dividends, right? So while the basic rate for payee tax is 20%, the basic rate for dividends is 8.75%. which is phenomenal, because the comparison is that even if I put £1 more into either the dividends or the payee salary, then I'm automatically going to get pushed into the higher rate, which is 33.75, which is 25% more. So putting £1 more into the payee salary increases the total taxes by around £9,000. And that is why a lot of people try and restrict themselves to the payee salary and dividends of this amount or less than this amount to stay within the basic rate tax bracket, so that they don't need to incur the 33.75 dividends tax rate, right? So, and this is not just me saying, if you go and look at the optimum salary, if you just Google for it, you'll actually find a lot of articles written, and even the accountants explain that this is going to be the optimal tax salary for a contractor or for a person running a limited company, for that matter. So either ways, either you increase the dividend or you go increase the payee salary. If you increase it beyond that 50,000 threshold, then you are automatically incurring 33.75%, which is why that's an optimal tax structure. So which if you calculate and compute like I just explained, with that kind of a structure, with a person earning 500, obviously there are a lot of people who might earn higher than this as well and lower than this. I've just averaged it out from a contractual perspective, say that would leave money in the company which is being unused or which is being carried forward for next year or it's then reserved for expenses at a later point of time. And that is what we need to tap, right? So if we can increase the band, how is this money going to be used, or how is this money going to be tapped, right? So if I take my tax band calculations into effect right now and show you, so if the 37,500 is going to go up, for example, the 50,000 is going to become 60,000, then you have an incentive to take another 10,000 out of your company as dividends after the profits, obviously, which means that you will automatically pay an additional 8.75%, which most of the people would be fine with. The comparison is between 34% and 8%, so which then would automatically mean that people would be happy to pay this 8.75 or 9% tax. And that would mean that they are going to actually take out an additional 10,000 pounds from the company, and then they're going to take it into their personal accounts, which is going to go back into the economy. And also from a tax perspective, the overall taxes per year is probably going to be about 600 pounds higher, which in the scheme of things for an employee who's able to take out that much of amount is probably so less. And that would mean that if people are in a position to be able to do that, they're probably going to do that. So what does it mean in total numbers, right? Again, this is just an approximation. It doesn't mean that it has to be anywhere near accurate. So the Home Office says that about 4 million self-employed or limited company active accounts. So even if you take 10% of this who are able to do this into perspective, then that means that 400,000 people at about 10,000 pounds additional money that's being taken out of the bank account, the company account, and into the economy, which means a 4 billion pounds boost into the economy. Again, these are just indicative numbers. This is not necessary that these are going to be practical in all circumstances. But if you average it, because I've kept it at the lower conservative estimate of 10%. Again, the same concept, 600 to 700 pounds additional tax per person, even if you take 10% of it, which is another 240 million pounds that are additional tax that are being brought in. It doesn't fully balance it, but some portion of balancing of tax where you're giving a tax break, you're also able to get probably an additional tax by doing this, by incentivizing the employees to pay more tax, or incentivizing the contractor to pay more tax. Now, what does it mean for let's go back to the monthly earners, right? The permanent employees. What does it mean for them? Obviously, people who are in the less than 50,000 bracket, and the ONS statistics says that about 35% of households are earning more than that. So again, people who are earning less than that are sometimes incentivized with support from the government. People who are earning above 50,000 typically tend not to get any support, and they are on the fence. The bracket between 50,000 and 60,000 is probably the most hard hit, because they're neither on that side nor on the lower income side to be able to get any help from the government. So that's probably the segment that is most struggling. Obviously every segment is struggling, but that segment is probably neither getting the benefit on the lower income side, neither they are having a higher income to be able to justify it. But that segment will probably be the most benefited from it, because instead of 70 and 80 pounds, they will be probably getting about 170 and 200 pounds, which is at least significant enough to meet certain expenses. And in this time of inflation, that's probably going to be a bit more helpful, in my opinion. Again, these are just my opinions, and like I said, the main intention was to share the Excel calculator. So hopefully this video was useful to you, and please share your thoughts and comments. Thank you.